Hey everyone, this is Tim. Today I'm going to be going over the monthly REIT ADC, the Agree Realty Corporation. I'm going to be going over the dividend yield. I'm going to be going over why I think this is a good REIT to invest in if you're looking for dividend payments every month. As a caveat to that, I want to remind you that this is not financial advice. I am not telling you what to invest in. This is just simply informational, and you are responsible to do your own research and due diligence and decide what you will invest in. And I will go over more information about the company later in the video. Don't forget to hit the like and subscribe button. It does greatly help out my channel, and I greatly appreciate it. Hope you have a great day. Again, the ticker symbol is ADC. It is the Agree Realty Corporation. It is a monthly paying REIT or a real estate investment trust. At the close of markets, it was going for $69.02, but after the markets closed, it has dropped to $68 today, May 21st, 2021. So that is something to keep in mind. The dividend rate for this REIT is 3.77% or $2.60 per year per share paid out in dividends. They have a pretty good return over the last year. They've returned 13.06% in the positive. Year to date, it is only 3.86%, but the last month in the stock market has been pretty crazy. Over the last 6 months, it's 6.19%. And over the last month, like I said, it's down 2.59%. The chart isn't showing up for some reason, but there it is. But like I said, the last month in the stock market has been pretty crazy, like starting at the end of April, with Bitcoin dropping and pretty much the whole stock market dropping quite a bit. So that is something to keep in mind. If you're interested in this REIT, like I said, do your own research. But I do believe, considering the properties that this company has in its portfolio, that it is a stable company, and I will show you what I will talking about in a few minutes. To just go over the basic information for this company, the Agree Realty Corporation is a publicly traded real estate investment trust engaged in the acquisition and development of properties net leased to industry-leading retail tenants. As of September 30th, 2020, the company owned and operated a portfolio of 1,027 properties located in 45 states and containing approximately 21 million square feet of gross leasable area. They have 49 employees. It was founded in 1971 and is headquartered in Bloomfield Hills, Michigan. And as you can see from the revenue here, it keeps going up every year. And the projected income in 2021 and 2022 does look really impressive. By law, REITs are required to pay out 90% of their profits to their investors as dividends. They have grown their dividend over the last 9 years. They have a 5-year growth rate of 7.4%. They do pay monthly with an ex-dividend date right around the 27th of the month, and they pay out 22 cents per share each month, which will bring it to the $2.60 per share as a yearly dividend payout. And here's a list of properties that Agree Realty leases out to national corporations as well as other types of companies. And these are big companies, some of them, as in Walmart, Hobby Lobby, Advanced Auto Parts, AutoZone, Best Buy, Buffalo Wild Wings, Chase Bank, Dollar General, and that's just in Florida, but there's 45 states that they have properties in. Academy Sports and Outdoors, Applebee's in Texas, Bed Bath & Beyond, some more Best Buys, Big Lots, Burlington, Dave & Buster's, HEB, which is a huge grocery store in the South, especially Texas, Hobby Lobby, Michael's, O'Reilly Auto Parts, quite a few of them in Texas, Party City, PetSmart, Quick Trip, gas stations, Wawa gas stations on the East Coast. The reason I'm going over these properties is just it shows how stable this REIT is, considering that these are the kind of companies that they lease to, that the properties that they own, and also that makes me believe, like especially for my own portfolio, that I want to invest in this REIT in order to enjoy the stable dividend income. Like I said, they've raised their dividend every year for the last 9 years. So even though they are not a dividend aristocrat or a dividend king, I do believe that they are a good investment, and the financials look good. Their profits have increased even during the middle of this pandemic. And I'll be going over that shortly in just a few minutes. But I just wanted to show you just a small list of the properties that they own and the companies that they lease these properties to. Just that way it can give you some idea of how stable this REIT really is. So just a quick look at their financials from 2018, 2019, and 2020. You can see that their profits have increased from a rental income of 136 million in 2018 to 248 million in 2020. It's risen from core funds from operations in the millions from 93 million to 127 million to 170 million, and they project that to keep going up by 30 to 40 million every year as they get more and more properties. As you can see, compared to the other REITs in total return performance, the Russell 2000 and the SNL REIT Retail Shopping Center, like Agree Realty Corporation, comes out pretty far ahead in the total return performance, and they have pretty good financials. They have increased their properties from 645 properties in 2018 to 1,129 in 2020. And I know from reading their financial page here, all 136 pages of it, that they are looking to increase the number of properties that they own and lease out every single year. Now, as far as options go for Agree Realty, as is with most REITs, they don't do so well as far as trading options. Now, if you want to earn some extra income, you can do that. Just realize that this company on the stock market trades their options monthly, so they are not a weekly options company. And if you were to trying to buy the shares cheaper, you would have to go further out an expiration. For instance, if you were to do the June 18th, 2020, you would only get a single dollar for selling a put at the $65 strike. Whereas if you go out one more month to July 16th, you could sell a contract to buy 100 shares of Agree Realty at $65 per share, and you would receive $138 for selling that contract. Just be aware that if the stock price were to drop below the $65 on the day of expiration, you would most likely be assigned and you would have to buy 100 shares at $65 per share. So that's why when you sell the put, you would need to have $6,500 tied up in collateral. And if you're okay with that, then that's a way to make a little bit of extra money. And especially if you want to buy 100 shares at a discount and at their rate that they pay their dividend, that would be about $200 a year that you would receive in dividends from owning 100 shares of Agree Realty. Thank you for watching. I hope you found the information helpful, and this will help you make a decision in order to do your own research and help you decide if this is a company you would like to invest in for dividend payments every month. Don't forget to hit the like, subscribe button down below. It does greatly help out. And I will see you next time. Hope you have a great day.